tape monkeys, barrel burners, and anyone staring at a CPI calendar with cold coffee. Welcome back to Trading Floor. I'm Wildcard, and the straight is shut. Oil's up 10% in 4 days, the 30 years at 5.28, and the whole market is frozen waiting for Thursday the 13th. You feel that? That's not a slow Tuesday. That's tension you can taste.
Standard disclaimer before we go any further. Nothing we say on this show is financial advice. Do your own research, make your own calls. We're two guys talking markets, not telling you what to buy.
You heard the man. Now, let's set the tape. Futures are dead flat, the S&P barely twitching, the VIX sitting at 15.5. That's complacency, not calm. West Texas Intermediate crude is at $84.31. Brent knocking on 90. Overnight, the Nikkei ripped 2% on the weekend. The Hang Seng dropped over 1% ahead of Tencent. The setup is simple. Oil closing the Strait of Hormuz on one side, Thursday's CPI fork on the other, and between them, a market that refuses to flinch until one of those trains moves. Top stories. We lead with oil and Hormuz. Then TB takes the Thursday fork. Deep breath. Let's go. The deal around August 4th is imperiled. Trump's out here demanding reparations while claiming control of the strait. Iran's signaling it stays closed, and crude has jumped 10% in 4 sessions. That is not a headline you fade. That's a regime input. But here's where discipline comes in. The energy sector ETF trade. The tape broke against us. Friday, we stood down, closed clean Monday. The trade came back up to the top of the rip, and we are not chasing it into Thursday. Flat is a position. 2 tickets loaded, 0 triggers pulled. That's not a victory lap. It's process. The audience knows we're not here to brag about standing down. We're here to survive until the real move shows up. So what's your read, TB? Is the oil move over, or just getting started?
The move is real, but the speed of the rip means the easy money is already made. The barrel is doing the Fed's job. Hammock said some number of hikes may be needed. The 2-year barely moved at 4.26. Nobody believes her. The term premium is widening because oil is tightening financial conditions faster than anything Powell could say. The 30-year at 5.28 with a 2-year at 4.26. That gap is the deficit and the supply shock, not a rate repricing. So the real equity risk Thursday isn't the number itself. It's whether oil hands the Fed a policy excuse to stay on the bench while crude cools the economy for them.
That's the line, bro. Oil doing the Fed's job. The market has already decided the Fed is furniture. The real transmission is the barrel. And Thursday's CPI, if it prints hot, just confirms that oil gets to finish the job. What's the fork for the tape?
2 trains, 1 track. Hot print, tech bleeds, oil and gold win. Cool print, artificial intelligence runs. Oil catches a fade if the strait opens. But the deeper tell is what the market's already telling us. The tape is frozen, not refusing to pick a future, it's waiting. Flat S&P, VIX at 15.5, fear and greed still in greed after the Dow dropped 50 points Monday. That's not conviction. That's a market holding its breath. The only receipt that moved was gold at 4,432. Everything else is noise.
Gold holding at 4,400, while Hammock talks hikes. Normally, that's a sell signal. Instead, gold caught a bid. That's the deficit bid. The market bought the record close and bought the hedge. It's refusing to pick a future. So we go into Thursday with cash as the position. Next up, earnings. And TB, it's a ghost town this week.
Quiet week, and we'll say it plainly, no interesting earnings beyond Cisco. They report Wednesday night after the close. Guidance will be a lens on enterprise spending, but that's it. No filler, no manufactured drama. Moving on.
Economic calendar. TB, you got the dates.
Tuesday, August 11th. The United Kingdom BRC Retail Sales Monitor. Consensus 1.6% versus 1.7 prior. Wednesday, August 12th, United States NFIB, Small Business Optimism, 97.5 versus 97.4, Japan Reuters Tankan at 13 prior. Thursday, August 13th, and I'm saying the date clearly, that's the big one. United States CPI, month-over-month consensus, 0.1%, year-over-year 3.4, core CPI 2.5. That survey window closed before oil ripped, so it's the last clean inflation print before the barrel distorts everything. Also Thursday, German CPI at 2.8%, Japan PPI at 7.4%. Friday the 14th, United States core PPI consensus 0.3% month over month, and United Kingdom GDP. Every other release is noise unless it misses by a mile. CPI alone can reprice the entire board.
So the week is a giant countdown to Thursday the 13th. And if that number comes in cool, artificial intelligence names RIP and oil gets faded. But we're not front running it. Next segment, sector rotation. What's leading and what's lagging? TV?
1 week leaders, the tech sector technology up 4.65%, XLB Materials up 4.25, XLV Healthcare up 3.82. Laggards, XLP Consumer Staples flat at 0.1%, XLRE Real Estate down 1.73, XLU Utilities down 2.7. The message is clear. The market loves artificial intelligence and cyclical growth, hates bond proxies. Rotation says risk on, but the 30-year and oil cast doubt.
And quick hit on Apple. Jefferies cut to underperform. Target $263.66. The stock dipped 1.63% Monday into a flat tape, and dip buyers are camped at 300. If 300 breaks, the canary sings. TB, your gut book on Apple?
My paper account is long Apple at 3.9, stop at 295. I'm early and I'll say so. If 300 breaks, the stop does the talking. That's texture, not a thesis.
Respect. Now, international to U.S. pipes. Asia overnight, Nikkei, 2% on the weekend. Hang Seng down over 1% nervous ahead of Tencent. Shanghai flat, Kospi up 0.73. Europe soft. DAX down 0.21. FTSE down 0.2. Euro Stoxx 50 flat. Dollar yen plus 0.08%. Still under 160. DXY up 0.03. But before we get to the carry trade, we got to address Colombia. 132 dead, hundreds injured. Our hearts go out. Then the market angle. Arabica coffee. Coal, oil exports. The first trade is waiting for the epicenter, not chasing the gap. Another brick in the supply shock mosaic.
Asia is bifurcated, not uniform. Japan strong on yen weakness. China nervous ahead of Tencent. The yen carry trade isn't dead, it's coiled. If dollar yen grinds back above 160, that's the stress signal again. Connect it to U.S. names, energy, coffee. Miners get bid if supply chains tighten.
And that brings us to portfolio hot news. The artificial intelligence financing wall. This is the story that'll stress test tonight. Supermicro and CoreWeave fold into this. They're not just earnings stories. They're the first proof of whether the build-out is over-leveraged. Here's the whole picture. There's a $500 billion pool of private credit lined up from Apollo, BlackRock, Blackstone, Goldman, KKR. Intel jacked their raise to about $20 billion with $100 billion in demand. 19 investment-grade deals hit on Monday alone, most in 7 months. Cloudflare just did a $2.175 billion convertible. And tonight, CoreWeave is expected to lose $1.67 per share. That's the price of the bet. Meanwhile, Riot Platforms locked $9 billion with Anthropic through 2048. Miners literally became artificial intelligence landlords. The bull case. Insatiable artificial intelligence capex gets funded regardless of near-term losses. The bear case, over-leverage, crowding, and a credit event if yields spike further. Second-order effects hit the tech sector. Credit spreads, semi-equipment names. This touches our book via artificial intelligence proxies we haven't entered yet. The wall matters for our next move after CPI. No filler, full depth.
And my wave trader algo has scanned 900 names, 3 sessions straight. 0 entries. Gates rejecting almost everything. When the machine finds no edge, the tape's picked over. So we sit in cash until Thursday.
My TFT algo is sitting in healthcare and banks, while the artificial intelligence rip runs without us. That's fine. Discipline is the position. All right, let's close it out. Here's what we're watching tomorrow. Number 1, Thursday. CPI, 0.1% month over month, 3.4 year over year, the main event. Number 2, Cisco earnings. Wednesday night, enterprise spending barometer. Number 3, the energy sector. ETF discipline. First pullback that holds or post. CPI confirmation. 2 tickets loaded, 0 triggers, no chasing. Number 4, gold at 4,432. If it holds after CPI, the deficit bid is intact. Cash remains the position until Thursday decides. That's the show. Trade sharp, stay liquid, and we'll see you tomorrow.
Later.
Later, bro.